Thank you so much, Robin. Let me go ahead and invite my two fellow panelists. So pleased to invite Bran and Rana on the stage. Just a quick introduction to Bran. Bran has been a co-founder and CEO of the 10x Bank, and it's again a very, very interesting experience he shares. And Rana Bhattacharya, the Chief Digital and Information Officer at Synergy Bank. A very, very warm welcome, please. So it's been a very interesting day. We started with defining the new generation and the next generation core, and panel 1 and 2 kind of went into a fair bit of details on how it makes a lot of sense for new generation core to happen. And I now have my fellow colleagues who've done it all, so it'll be very, very interesting to understand their experience. So Rana, I'll start with you first. And again, as you've seen at Synergy Bank and in your past life, it's always very, very difficult to modernize the core. And you at Synergy have done it very differently. So how do you reduce the risk or roadblocks in a transformation of core banking? And does hollowing the core helps, or you do have some different thoughts?
Sure. By way of introduction, so I've joined Synergy more recently, but in the past I've helped as a consultant modernise banks, and from an end user perspective I've built banks like Atom Bank, for example, and allowed them to move to the cloud and new core banking platforms like Machine, etc. So I would say Synergy is on its kind of starting block of that journey, so I'll talk about broad experience rather than Synergy. So I would say some of the risks are, I mean, when you talk about, if you're an existing bank and you're talking about core banking modernisation, just reflecting on some of the previous discussions, you're probably bringing in other things. It's not just a new core bank, you're bringing in probably cloud. You have to think about the goals you want to achieve, which is primarily competitive advantage through enterprise agility, being able to pivot. And quite often you find an organisation has outsourced a lot of their capability, and on these sort of journeys, in my experience, you find you kind of want to start insourcing, and you go away from a culture of outsourcing to wanting to insource and engineer yourself. And to make that journey successful, you're not going to ultimately sack your whole team, but you're going to need to make some key strategic hires to kind of enable that journey and de-risk that journey. People have done it before, have understanding of the journey you want to go on, the engineering discipline you want to move forward. So that's one key element from my perspective, that if you don't consider that up front, you're likely going to have a harder journey, have more failures going towards the outcome you want to reach ultimately. I think Conrad also has some good points around partnerships and depending on your size, because when I was at Atom, we actually went with Google, and it was more from a perspective of, I mean, you do use your RFPs, etc., and you end up with probably AWS, Google, that's typically more for Azure. But we found that Google wanted to help us on our journey, and going from a perspective of, we weren't a cloudified organisation and someone who wanted to embrace the cloud. We wanted someone to help us on the journey and have a relationship that's beyond contract. And from my perspective, we had some issues. They helped us with the issues and to punch through those. And it was a great relationship. And I still work with them. Manage things in bite-sized chunks as well to de-risk. You don't have to change everything in one go if you're an existing bank. I think one of the key elements of the modern core banking platforms, we call it hollow core composable banking architectures, is you can leverage some of your existing capabilities and then switch them out later. You don't have to try and do everything in one go, but if you kind of imagine a bank where quite often it's quite traditional in nature, they hire someone to effectively take them on their agile journey, you're going to have to make friends with the CFO and other folks to kind of get the money and show the value. right? You're probably going to have a skeptical board as well, and you need to kind of show how you can bring value quickly and trying to have an incremental journey where basically every 3 months, every 6 months, you've got a significant piece that's actually gone to production will actually create confidence and unlock funding. And I think sometimes it's not always a technical risk, but the cultural, organisational risk of where there could be a lack of confidence because something's new, something's hard. If you're greenfield, it looks slightly different. I quite like a model called sidecar banking, right? So if you're an existing bank, you can quite easily start building a bank to the side of the existing bank and start proving it, start pumping through volume, start migrating products and customers from the old bank to the new bank. Doesn't have to be a new brand, sometimes it is a new brand. There's businesses in the UK that have actually, larger business, quite big banks in the UK that actually have done that, and what they found is it's not just about the technology, but it's also a different view of how you do governance and different view of process that actually creates that organisational agility to actually de-risk things, because quite often banks are quite cognizant of the fact that they're quite old tanker-esque, and they often have discussions around, could we do something faster to one side using a different model, and sometimes those banks do actually invest in that. I would also say for some of the more modern platforms, the platform providers necessarily don't have a view of the entirety of the ecosystem that needs to be pulled together. So when you talk about hollow core or composable architectures, what does that end state need to look like? And quite often you might want either you hire in the expertise or leverage an SI who's kind of has done that before to give you that viewpoint. But again, you don't have to go and buy off everything in one go. You can just incrementally do that. You don't even need to have a blueprint of what your target state needs to be, per se, but you just need to be cognizant of some of the key elements, etc. So that, as well as, I think if you're going to go down the route of, if you're an existing bank and you want to do this change, it's not just going to be a technology change, it's an enterprise change. Think about the culture as well. One interesting piece I found, especially when you're looking at some of the modern platforms, contractually you might find, if you're talking about existing platforms that have been in the market for 10, 20 years, you could have contractually you covered from a compliance perspective on like interest calculations, etc., etc. But when you start moving into some of the more modern platforms and where you're doing more of engineering or have a partner ecosystem, you might not have that comfort. So your organisational model has to understand what that means from a compliance perspective. It's not insurmountable, but you need to kind of go in eyes wide open. And another key bit for me was basically, when you're trying to make this incremental change, adding new features, adding new products when you've got your old and new, unless you want to try a big bang, which I would advise you don't. You want to architect what you have today, make some changes that allows you to kind of switch between your old bank and new bank. So you could be in a position where, let's say, your mobile banking app can be looking at your old platform for a set of products and your new platform, and over time you're moving stuff over and you kill off the old platform. But again, you kind of need to think about how you want to architect your end-to-end to kind of enable that to succeed. But I mean, in terms of painful lessons, I think those are some of the lessons I've learned from a de-risking perspective.
Thanks for pretty interesting sort of insights on how we can reduce the risk. Brian, just reflecting on, again, if you can just introduce 10x so people can appreciate what you've built and founded, and also looking at the whole expanding operations and adopting the new markets, how do you see the impact of a new generation core on scalability and agility of what you've built?
Okay. Was the story simple? A middle-aged, bald Irish bloke turned up in Hanoi with an idea to build a bank. There was no VC, no one knew what the cloud was, no one knew what an EDA, an MSA, most of them didn't even know who BBC were. So it was a different challenge, but I devote my life now for the last, ongoing to inclusion. I believe in inclusion, and my next gig I'll announce very soon is in India, addressing something similar. So it wasn't even a field because there was no farmers. So but on the positive side, it was very exciting. It was exciting in the perspective that, I do not envy any traditional banker. I used to be a banker, but I'm okay now. But I don't envy somebody trying to unravel a Gordian knot of absolute, excuse the French, shite, okay, as we say in my country. Led typically by people that are trying to solve a technical debt and build faster horses. Like a lot of the times I see, I'm damned by a visual thinker. I think in jigsaws, and it's confusing and worrying for a lot of people who work with me and for myself at times, but I see a lot of the banks at the moment very much like being in Detroit when Ford was putting up the factory and they were the blacksmith around the corner and investing in faster horses. And that's still the case. So I'm not going to get on that soapbox. Let's get back to the question. Agility is a product. It's an outcome. I hate walking into organizations where the post-it salesman is driving a Ferrari. And people are talking about agile at scale. We're going to do agile. It's fragile, guys. It's not agile. It doesn't exist. I don't like digital factories. Digital factories produce pollution, like all other factories. It's about getting the enablers right. And out of that, you're going to get that culture, because that's the difference. We can all talk about Drucker, we can all talk about Conway, all of these North Star guys that got it right. And as I listened today, it was very, it was ticking it down, cloud native. If you're not cloud native, forget it. Open source has to be. Why? Because otherwise you've got closed innovation. Platform, yeah, you use platforms. Why would you build it? Get to market quickly. Minimal lovable proposition. You're going to get it wrong. It's just levels of wrong. But with platform and open source, you've got other tools. SaaS, 100%. And if we look at the SaaS question, banking is commoditized, guys. It's a commodity, like water, like oil. And that's why we're seeing ridiculous costs of acquisition, ridiculous costs to serve, and banks expecting a Harry Potter moment in the future, especially you make a profit when you're paying $200 for your acquire a customer and your customer lifetime value. My daughter in Revolut, they will never make the money back for 10 years on CLB. Okay, so what core allows you to do, I call it, back to my visualization, inverts the pyramid. So if we think about traditional, the way we used to do it, and when I had a lot more here and a lot less here when I was working in traditional banking, the pyramid, the big part of the pyramid was core. And what were you doing? And I think, Conrad got it. Back then, I'm old enough to have written them. And they were a product ledger, okay? But then they actually turned into something. They grew many heads and they became complex. And then we started talking about technical debt and if if it was a car and you switched on the radio, suddenly the back tire falls off. Nobody knows, how the hell did that happen? Normally when you're speeding in front of the regulator, unfortunately. So I've been red-faced a few times. So what these low-code, minimal code, highly configurable, API, composable, I think Mambu came up with that term, quite an inspirational CEO I knew back when they were a very small company. What they came was the ability to actually take that commodity, which was previously taking 80 to 90% of your staff's time, effort, your risk models, all of those non-functional elements from security, et cetera, and do it for you. So we built TNext, we built two banks. We built Micro Merchant Bank, and we built a consumer bank for Gen Z, and we built an ecosystem in the middle where we brought them together. Core took me a month. Now, they're simple products. It was a CASA, it was a bilateral loan. It's not like, structured finance, where you've got a covenant, a mezzanine, and the end. No. Simple, everyday products, because I work in inclusion. I don't work in corporate world, even though I have in the past. So it takes that away. But that's really important, because now if you look at any digital bank, the pyramid's the other way. Because banking is two layers now. Before we talked about share of wallet, Share of wallet, yeah, great. It's about share of attention that counts. How? Because the competition paradigm has changed, as the UK has demonstrated dramatically, with the likes of Starling and Monzo and Elika. Congratulations on your profitability, very impressive. And they have changed that competition paradigm. So now they're commodities, you need event-driven architecture, and I'll close up by this little part of the picture. All of these things we've been talking about, cloud native, EDA, data fluidity, data liquidity, all of these things that you have to have, they're just enablers for one amazing thing, which is getting in a culture in your organization where the best idea must win, that it's almost like a replay of the Agile Manifesto, but it's about having employees that don't feel like employees, feel like owners, who care, who fail forward. And if I was going to deleverage one thing from every traditional bank, and this is pretty much, I've worked in pretty much every continent of traditional banking, I wouldn't be too much worried about the NPLs, because they can manage that on a risk basis. It's the ego. I would deleverage the culture, and that doesn't happen by putting in the tools. That happens by leadership. And the biggest deficit in banking right now, it's not money, guys. Eye-watering amounts of money are spent on transformation. 75%, God bless you, I'm a dear friend of AWS. No. 99% of them don't deliver original spec. And it's not because of money, it's not because of technology, it's all democratized now. It's because of culture.
Interesting, very, very interesting. And Rana, when you look at Synergy and you had a choice of a new generation core and an old generation core, what we call universal banking, what do you see as the pros and cons you kept in mind when you chose your journey onto the new generation?
Well, we're actually still in the process of picking which core we're going to go for, but previously, I would say aspects. I think if you kind of consider the pros and cons, right? Ultimately, technology is a tool. Yeah, tools. Yeah. What's the overall outcome you want to achieve, right? It's the you want enterprise agility. You want to be able to deliver change faster. That's aligned to customer expectations, aligned to business expectations. You want to be able to kind of leverage some form of event-driven architecture when a customer does something, you can provide an insight within the bank, outside the bank to the customer, etc. So in terms of, call it benefits, right, of this journey, you would want to have, for free. Well, in some ways, the whole journey is that, you want to get to enable those things to happen. It's different lenses you can put on it, but ultimately, it's effort displacement in some shape or form, right? What you don't want to do is basically, you don't want the most valuable resource that any organisation has is their people, right? You don't want them to be focused on the plumbing, you want them to be focused on the things that matter to the bank and the customers, right? And when you look at a modern core and actually a modern architecture, because you have to go with the core, right? It's how do you make your people, your most valuable assets, as productive as possible to give you the results we want. And I think Brian made a great point around ownership, because if you can get people to stop doing like the plumbing and get them working on more valuable things about going, the ownership starts being developed, because people would like to have pride in the work they're doing, right? If they're bogged down in the monotony of wires and so on, you won't get that buy-in. But for me, there's so many different lenses you can kind of look at it. If we talked about modern cores, have to be in the cloud. You get better views of resilience. You stop getting people focusing on things like patching and vulnerability piece. It's very important, but by virtue of being in the cloud, a lot of that stuff can be taken care of for you. Again, releasing your people to focus on more things that, I'm not saying those things don't matter, but you have a different route to getting those things accomplished. The whole piece around, the composable architecture piece, I think it's great where basically, if you think about more traditional banks, the history of banking, right? I I did some work at Barclays, and they've got systems. So
Good for it.
I was a consultant. But you know,
PowerPoint.
Yeah, I built stuff. But yeah, there was a lot of PowerPoint. But you know, you've got mainframe systems that people are scared to move away from, right? And you kind of have psychological locking and vendor locking, right? With new models, you don't really get that level of locking because you're in the driving seat as to say, you know what capabilities matter for me and how am I going to bring them into the bank? Am I going to use a SaaS capability? Am I going to build something because I think it's very important? Then I mash it all together within my ecosystem myself, right? So you go away from that kind of vendor locking element of it. I think it's a key element because I get tired of having contractual discussions and going, oh, I've got 5 years, I would rather be able to break the contract now, but I have to kind of work things out, could pay the money or build something new, but I still lose the money, but hey. That plug and play piece, I think it's great, and also the natural kind of event-driven piece where basically you make that interaction between the bank and the customer and also colleagues in the bank more real-time. I think some of the drawbacks, I think, especially around the selection process, is sometimes when you think of breadth of product, Brian said, like, if you're looking at complex products like structured finance, etc., you're not going to get that. You look at some of the modern calls, as long as you get overall architecture, it's relatively simple. Once you've kind of implemented it, you can create a product variant within 2-3 weeks quite easily and have it end to end built and pretty much rolling out. That can happen. You can't do that in traditional architectures. But when you're looking at more complex products, I think you kind of have to look at how the hollow core will operate, and if you're looking at roadmap features, my advice to you would be make sure the roadmap features are in the contract. And you might also feel sometimes initially you might be over dependent on the SI, especially if the culture of the organisation hasn't built that engineering culture outset.
Thanks for the interesting insights. And again, Brand, looking at event-driven, we spoke about real-time data analytics. Now, when you put this in context of business growth for a young enterprise as a bank, how do you see the new generation course features around event-driven processing or providing you some data analytics? How it can drive the business growth for the new generation bank?
It doesn't. It's not its job. See, we need to be careful here. For the architects out there, I'm a career CTO, but I'm also a CDO and a marketer, which kind of balances it off. Separation of concerns. When you're looking at a taxonomy of a bank, you need to be very careful that you know what pieces are meant to do what and never do anything with those pieces that they shouldn't be doing. Because then you end up with innovation debt, which I'm afraid of, but more appropriately technical debt, risk problems, GDPR takes years because you don't know where your data, all of that nonsense that we went into. So, I think cores are so important. They are the system of record. But that data needs to flow around your organization. It needs to be fluid. We're seeing a lot of things happening around data meshes, which I like, but which is about making sure that the data flows to the people with the most knowledge in that area so they can make the right decisions. Or your AI or your auto GPT or whatever can make the right decisions. Now, core is a huge part of that. What we did, I kind of stepped back and said, well, it's all about customer at the end of the day for me. I'm a technologist, I hired better technologists, which was great. So, I don't like being the best at anything in a company because that's dangerous. So, but what I wanted a real-time view of customer, every single thing. And the reason being is, because if you know what they're doing right now, you know what they did in the past, it's kind of for you, capital markets guides there, value at risk, when it worked. You could normally do next best action. But we started also taking behavioral information. We were taking voice patterns from the from our EKYC. We were taking facial patterns. The bank I created also tracks your mental health, your physical health. We're the only bank to ask, how do you feel today? Why do you feel like that? Because, of course, we wanted to embed banking, okay? So now we step back to the competition. Banking's never going to fundamentally change, guys. It hasn't. It's not going to change. We do three things. We lend, we provide interchange, and we provide a place to store money, okay? It doesn't matter if that's embedded BNPL, blah, embedded lending. It doesn't matter what it is. It's fundamentally those business blocks. What's changing is how we engage with our customers. And as I said, I view banking actually as three layers, and it scares people. I see affinity groups. So people like SMEs or youth or students or whatever, left-handed fire brigade men, I don't know, whatever affinity group you want to put. Then you have a customer experience layer, which is trying to get share of attention, which embeds into the customer's life. You're relevant, okay? Banking has to be invisible. And in fact, the greatest thing about digital cores are, whereas I was sitting as, I used to be, CTO of one of the largest banks in Middle East Asia. The one thing that kept me awake at night was the core. Did the end of the day run? Oh Christ, force okay, what's happened? I never worried about the digital core because it worked. It was concerned with one thing. It did it really, really well. It is a foundational capability. It fed data in real time, the usual. You can either use Kinesis or Kafka or Google variants, whatever. It actually made that data liquid. So when that data arrived there, it was valuable. I wasn't ETLing, ELTing, praying, whatever the hell you do around your data, or sticking in a spreadsheet and worrying about data lineage when the auditor comes. But we were very conscious on that layer. Without a core that's open, that can stream this data, or can rest this data, or whatever integration pattern you're taking. Of course, in many cases, it doesn't have to be an MSA or an event-driven platform, because a lot of the corporate GLs are expecting an ELT at a point of time, whereas digital cores don't have an end of day because they weren't built for branches that closed and opened. I remember, sitting there when I was in Rabobank many years ago, looking after one of their banks, and we were waiting, has the branch closed? So we had to be, the client around the whole of, at that time around Holland and Ireland. So it's all about engagement, guys. Data is so important. I don't like these platitudes, data is oil. No, it's not, because oil's not in fashion now, okay? Right? Data allows you to run your business successfully because you can see, remember, you don't use BPM or PEA in a digital bank, because that suggests you've lots of people. Okay? The first thing I said to my kind of bemused northern communist Vietnamese ex-Politburo guy was, I'm going to run this bank with 3 million customers with 171 employees. And at 4 million, I'll run it with 162 employees. And I leave you with one parting one, the one that really freaked him out. The first employee that I hired in TNEX was a psychologist. The second employee was a sociologist. Because I wanted to understand what my customers wanted. What was the day in their life? I don't like these customer journey logs. Get above it, guys. What does somebody do every day? They get up, they need this. What do they want in the future? How do they want to retire? How do you become an enabler of their lives? How do you speak to them in a language they understand? Not this bull crap of we must teach what future cost or accrual interest or future cost of cash and all of this nonsense. So how do you become relevant? And that's data. The last point I'll make, I ran the bank with 2 rules. I had very bright people, so they didn't need to tell me, what was right. So I banned that. I said, tell me what's wrong. We spent the whole time working on it. We celebrated the solutions. But also I had one other metric, was customer happiness. So we took all of the data from every dimension, not just spending patterns, but we did, forest analysis, regression analysis. We had some amazing data scientists. And I wanted to know how happy my customer was. And I was really, really interested how that was going. And it went up and down depending on, oh crap, that didn't work. Let's activate quickly. And of course with the core, And rather simple products, but at the end of the day, most people want simple products, either an interest-bearing CASA or a current account, deposit account, good payments, and a bilateral loan with equal monthly installments. That covers pretty much most of the planet. I could do that very, very quickly. So core is part of the democratization of banking, digital cores. Before that, it took you 5 years. I got a phone call from a very large friend, very large, he's actually large and in a large bank, he's American. But he only wears a European medium, big boy. His own postal code on his big lad. And he said, Brian, we're building a speedboat, like you said, on bank on the side. I said, yeah, how can I help you? Oh, yeah, got a big problem here. I said, how long have you been doing it? 4 years. I said, stop it now. Because the minute you build a product, you have to change it. Any bank that's we built 2 banks in 9 months. It nearly killed me, but we were changing it immediately afterwards. But we had built the ability to remove the old view of RTB, run the bank, change the bank. Remember, all the accountants love that. To continuous change. We'll never do a core transformation again. It doesn't exist. The only thing I worry about is customer engagement, and customer engagement is negatively impacted if you've got an innovation deficit, which is directly linked to your culture.
Thank you so much, Bran and Rana. I think we're running out of time. Are there any questions? Happy to take that. Okay, thank you so much.